Rob, it's great to have you back on the show with us, particularly in light of the fact that it's been barely a week since you returned from your recent trip to India. Having been there in the midst of that, talking to people, give us a more firsthand view of just how bad it is. What is it like?
Well, I was in the south, which has been spared much of the recent wave, but certainly I went through Delhi, talked to people there, and both Delhi and Mumbai, the big cities in India, are deeply affected. The caseload is very high. The space in hospitals is very scarce, and you have these horrendous sights of people queuing up, waiting for hospital beds, people dying because of lack of oxygen. This wave has hit much harder than the first wave. In the first wave, we had something like, at its peak, 90 to 100,000 cases. This wave has been much more serious, more localized, and devastating in its impact. So yes, it is a tragedy of great proportions at this point.
So what are people in India saying about this, Raghu? What are they saying? I mean, what went wrong?
Well, I think what went wrong was simply we underestimated the virus and its ability to adapt. I think if you looked at the first wave, for a variety of reasons, it died down. We don't fully understand why. And it was relatively mild. At its worst, deaths were about 1,000 per day in India. And it's a large country, 1.4 billion people. That's actually a very small number compared to the deaths, for example, in the United States or Europe. So there was a sense that Indians were, for whatever reason, more immune to the virus. We could cope. And it wasn't a matter of, statistics not being right. If you looked at the hospitals, apart from a few, situations, the hospitals were able to cope also. So in general, there was a sense that we had endured the worst the virus could give us. And, we had come through and it was time to open up. And that complacency hurt us because as India opened up, as it became more open to big public meetings, the virus came back in a new variant and was much more devastating. And the complacency implied that it spread much faster.
So in terms of these shortages, oxygen, for example, supply issues more than availability, et cetera, all these things that have hit this country so hard all at once. Many people, I think, are asking, like you said, what happened? But how did India get into this mess? Was it a lack of leadership? Was it just because the pandemic has blindsided so many policymakers, so many businesses, so many countries?
Well, I think there are two areas where you can say it was a lack of foresight, a lack of leadership. One is certainly anybody paying attention to what was happening in the rest of the world, in Brazil, for example, should have recognized the virus does come back and potentially in more virulent forms. We saw that in Europe also with the so-called British variant. So if you were careful, if you were cautious, you had to recognize that it wasn't done yet. And India had built some facilities during the first wave, which were dismantled over the course of the year. And of course, they would be very much needed at this point. The second, I think, place where one could have paid more attention is the vaccinations. It was clear that India needed a massive volume of vaccines. And unfortunately, we don't seem to have prepared for the volume of vaccines we needed to fully vaccinate our population. And some of that may be the sense that we had time, that since we had dealt with the virus, we could roll out the vaccination slowly. India actually, to its credit, gave away the vaccine to a number of countries early on. And those vaccines would have been very useful in many of the urban areas which are now badly hit.
So what does India need to do now to recover, to repair, to dig out of this hole and move ahead?
First, I think there's a massive effort on in India from the private sector, from voluntary organizations, and also from India's diaspora. So the good news is people are engaged, people are trying their best in the face of a very, very vicious pandemic. So That's good. I think the government is getting its act together in trying to ferret out where oxygen is, trying to bring it together in some kind of a central plan and allocate it appropriately. This is still work in progress. The Army is being brought in, the Air Force is being brought in to ship things. We are in emergency mode. So the good news is we finally realized this is a full-fledged emergency and are bringing all resources to bear. And certainly the world is helping India out. Going forward, of course, what we have to watch out for is as this spreads to rural areas, there are areas which have a fraction of the hospital facilities that Delhi and Mumbai have. And we have to monitor that process and be quick to ship resources there, also pull out patients who are deeply affected and bring them into the areas where there are more hospital resources. South is relatively little affected. And, the silver lining is Maharashtra, which was first affected in a big way. You're seeing the cases starting to come down. So it may well be that resources open up in the western part of the country, which can then provide benefits to the other parts which are affected.
Central banks around the world, of course, have responded to the virus in their economies with, extraordinarily stimulative policy. What is the role, if any, for the Reserve Bank of India in this process?
Well, it's doing what it can. It's been as accommodative as possible, given the fact that inflation hasn't really come down and was starting to look up. So I think the Reserve Bank has been as accommodative as possible. It has helped finance the government deficit, much like other central banks across the world. It's also built up a fairly large foreign exchange reserve position, which will come in good stead as there are some doubts about the Indian economy going forward. This would at least be a measure of comfort for foreign investors.
So if I ask you, gee, how does the global recovery look to you? First of all, obviously some people are truly in recovery, or some countries, I should say. The U.S. is probably going to have an economic boom on many fronts. Others are still in the hole. Is the global economy in recovery? And the disparities are so big. How do you think about it? How do you measure it?
It is going to be a very, very disparate recovery, both across countries and within countries, right? So, the U.S., enormous amount of money has gone into supporting households and businesses. So much so, as you saw in the first quarter, household income has actually gone up. Even in the midst of a pandemic-induced recessionary conditions. It should be recessionary, but actually we see a fairly strong growth. And that suggests the amount of support that industrial countries, especially the United States, have been able to give their economies. And that implies very strong growth going forward, even stronger growth in the second quarter, and excellent job numbers going forward in the United States. Contrast that with Mexico, with Brazil, with India, where you've had a very bad virus, which has created a substantial amount of damage, a lot of scarring of businesses, a lot of debt that has been built up by the ones that have survived. And of course, vaccinations are going to take longer to roll out. The US is going to be, by and large, fully vaccinated by early summer. In the rest of the world, it is going to take a lot more time, especially in the emerging world. So more damage, less support, longer time for vaccinations, which means those economies are going to take much longer to recover. And of course, within those economies, the poor, the small businesses are much more severely affected because of the lack of government support.
I have to ask you specifically about the current stance of Federal Reserve policy. Let the economy run hot. Don't worry about inflation. Push the inflation up to 2% or higher. Keep buying bonds as far as the eye can see. IMF warned at the last meeting that if the Fed doesn't carefully telegraph what it's going to do next, tapering bonds, for example, could be really bad for emerging markets. Do you see a risk there with the Fed's stance and what it means for the rest of the world?
Well, the Fed has to do what it has to do, given where the U.S. economy is. I think the Fed is a little bit like the dog chasing the car finally catching up with the car. The Fed has been saying we aren't the only game in town. We need fiscal support. And of course, what's happened is you've got fiscal support in enormous quantities, with the Democrats winning both the Senate and the House. And that then makes the Fed's policy of staying on hold for the foreseeable future, waiting to see above 2% inflation for span of a year before deciding to act. It seems as if the Fed has been somewhat overtaken by events. It will stay accommodative. Chairman Powell has said again and again, we aren't even thinking about raising rates or tapering. But my sense is the amount of fiscal support that's underway and the strength of the economy will probably force the Fed to perhaps rethink what it has laid out. And of course, when that happens, and a financial market which has been thinking that the Fed is not going to act in the near future is likely to be somewhat surprised at the first signs that will happen.
Okay, so you see some risk there. What about debt? Overhang of debt. I mean, every country in the world has, U.S. is one of the biggest borrowers now. You have warned of a kind of a doom and gloom scenario. You are concerned that there are financial risks embedded there. What is the biggest risk in all that?
Well, first, I think the old views on debt have to be reconsidered in the light of relatively low interest rates. But what happens if interest rates start picking up once again? And this is where the maturity of government debt, the amount that has to be rolled over every year, starts becoming an issue. And one of the concerns sometimes is we don't pay enough attention to how much has to be rolled over. If you look at Japan, the IMF suggests a significant part of its debt has to be rolled over going forward. And that means if interest rates start popping up, which they haven't for a long time in Japan, but if they do, it means debt service becomes more costly. The U.S., in the IMF's estimation, is the number 2 country here. It has a lot of debt that has to be rolled over. In part, some of this is because the Fed buys long-term debt and issues short-term paper against it. So when you look at the effective maturity of public debt, it is shorter than we think. And what that means is costs could ramp up quite quickly when interest rates pick up. Is the U.S. in any danger of debt default? Not in the near future, for sure. But for other countries, for smaller emerging markets, as interest rates start picking up, many of them are at the level that Reinhardt and Rogoff in their famous book would say is way beyond what is sustainable in an emerging market, debt levels of 90 to 100% of GDP. So even though interest rates are still relatively low, as they move up, there will be more signals of debt stress across the world, and we will have to deal with that.